Hello, everyone. I'd like to welcome you to today's session on investing in China's Citytech sector. We're really happy to host this event. This is Venturis Group's annual flagship Smart City Tech Week program. Venturis Group is a city tech business builder and investor. And my name is Frank Au, and I'll be your moderator today. I'm a managing partner of Pacific Pine Group, an investment company focused on Greater China. And I'll be, again, your moderator for today's session. What I'd like to do is I'd like to start off with some introductions. First, I would like to ask Chibo Tang of Gobi Partners to introduce himself.
Thank you, Frank. And thanks to Venturis Group for having me today. I am managing partner of Gobi Partners and Gobi Partners GBA. I'm based here in Hong Kong. And, Gobi Partners has been around for quite some time. We started in 2002, so we celebrated our 20th year anniversary last year. Today, we're dual headquartered here in Hong Kong and also in Kuala Lumpur. So we're quite a regional venture platform with major base of operations in China, centered around the Greater Bay Area and also in Southeast Asia. And I guess we're moving along the Belt and Road out west into the Middle East and North Africa. So that kind of in a nutshell is the Gobi Partners platform today. But yeah, happy to be here and thanks for having me.
Thank you, Chibo. Next, I would like to ask Harry Mann of Matrix Partners to introduce himself.
Thanks, Frank, and thanks the group for introducing to involving myself. I'm Harry Mann, founding partner of Matrix Partners China. Matrix is a firm that has been around globally for 45 years. The China part of it, Matrix China, we have been in China for 16 years. I'm one of the founders. We're currently managed about 9 billion in total of AUM, with both currencies in local currency, RMBs, and US dollars funds. I'm currently based in Beijing. We run over 2 dual offices in Shanghai and Beijing, and has been invested mainly in early stage tech companies in China for the last 16 years.
Thank you, Harry. Now I'd like to ask Dale Nicholls of Fidelity to introduce himself.
Thanks, Frank. Yes, so I'm a fund manager with Fidelity International. So separate to our US colleagues, we manage all the money that we raised outside of the US, which is about $700 billion. The mandates that I run are Pacific, obviously mostly focused on publicly listed companies, unlike my colleagues that I'm joined with today. But I also run a closed-end fund focused purely on China. It's listed in London, and we have about 15% of that invested in private companies as well.
Thank you, Dale. And last but not least, I would like to ask Benson Tam of Venturis Group to introduce himself.
Well, thank you, Frank, and thank you all my friends for coming today. I'm Benson. I'm the founder and CEO of Venturis Group. We are a group holding company, and we have only one mission, which is to become one of the leading city tech groups in the world. What we do is to make city living more productive, more sustainable, and more efficient. The way that we do it is that we start by investing in, I would say, leading technology companies that are of city scale. We are now moving on to the second stage, which is to start building companies. And we are also starting to create new joint ventures and M&A opportunities as well. So that's us. And thank you, Frank.
Thank you, Benson. So what I'd like to do now is kind of jump into the panel discussion that we have set forth today. I believe people are probably a little bit curious about the title, Smart City, City Tech. I think it's obviously a specific term. So before we delve into the actual panel discussion on this category, maybe I would like to ask Benson to kick us off. Obviously, he has a company specifically he has built to focus on the smart city technology, and maybe he can help frame this discussion of what specific technology areas that he believes defines the smart city tech area. And obviously, we'll try to build our discussion around these subsectors.
Yeah, to keep it brief, I would say that smart cities and the digital infrastructure you need to turn cities smart is starting to catch attention at the investment banking level, where analysts have done 100-page reports about it. I would say specifically some of the key sectors are getting a lot of attention right now is, for example, smart energy, smart building, and smart computing. So these are some of the key ones. There are other subsectors as well. Things like, what Harry would talk about smart mobility. We are also talking about other things like smart city management. There are a lot of things. You may say that this is almost like an umbrella catching all the different technologies that are, and the differentiating thing is that it's all city scale.
Thank you, Benson. I think that's a great way to kind of set it off. So I'll recap some of the sectors that Benson mentioned that kind of epitomize this smart city tech category: smart energy, smart building, smart mobility. Those are some of the themes that I heard, and maybe let's start there. Basically, what I would like to kind of call on first is maybe Harry. And I think it's quite interesting today. We have investors that are very focused on and specialists in China, but coming from a very different position in terms of their respective investment programs. Harry is a long-time, kind of core internet investor in China, and I think his perspective, he's been operating in Beijing, Shanghai for a long time. So I think, he has a unique perspective on the things. So listening to what Benson outlined is kind of the key smart city tech areas. What are you most excited? What is Matrix most interested in these types of categories? Smart energy, smart building. Is this something you've actively looked at?
First of all, thanks, Benson, and thanks, Frank, for putting into perspective of what I think a lot of people were asking about, what smart city tech is all about. We look at things more from a technology angle. I would also like to say that on a more micro level, much more than what Benson has been looking at. There are a lot of digitizing process that we've been investing in the last 15, 20 years across the broad of Matrix that enable people to do things a lot more easier, right? I mean, I still remember 15, 20 years ago, when you get onto a plane, you need to print your own boarding pass, you need to do all kind of stuff to get access to get on to an airplane. Nowadays, everything is just not only digital but also real time. I can purchase my air ticket on the way to the airport. I don't even need to get my boarding pass. I walk into the airport with face recognition, get onto a plane. So that is what I realized that is the difference. And there are so many things that myself, Matrix as a firm, or broadly China VC, has built for the China market historically for the last so many years, that now can all be grouped together as being what we call Citytech. I would like to talk a little bit more about, I would say, smart mobility, because that's one part of the thing that I personally enjoy the most. Not that I enjoy flying on the plane all the time, but at the same time, we also invest into 2 out of the 3 leading EV companies in China. One is called Xiaopeng, one is called Li Auto. Those were very successful. People like to classify them as EVs, but we don't. We like to classify them as the next generation of smart vehicles, which they're not only electrifying cars, they're putting the entire car onto the internet that has a lot more functions, that they can talk to each other. If you have enough of these going on together with your network of charging stations and stuff like that, I think that will create something that is a lot more exciting than you see in this current market of just energizing, electrifying vehicles. There's one example I want to share with the group, which I personally thought was quite amazing. Just 2 weeks ago, I have my driver to help me to do some stuff that he has to drive from Beijing to Sichuan. So it's probably kind of like a 20 hours drive using my car, which is a Xiaopeng. So the first thing that I did is put onto the navigation engine, a navigation system onto the car. It indicates not only the route, but at the same time, how many hours that you need to rate, that you can reach. And on top of it, where you need to charge your car. You're going to drive 3 hours or 2 hours, 15 minutes at that particular station, how many charging stations are available at this current moment. And whether you should charge it to 50% or to 15%, that will maximize your trip and to shorten it the most and enjoy the most of your journey alongside with the 20 hours drive. That is what really amazed me, because it's not only a car alone, it's not an EV alone. You're connecting your car with the charging stations. You know exactly where to charge. You know exactly how many plugs are there. You know exactly how many plugs are available at this current moment, and they will try to use AI and big data to help you to analyze whether you should charge it to full or only charge it to 20 minutes, because the next one is even faster, that you can do it in the next station. So those are the things that I think, on a mobility kind of view, that when you see all these, not only EVs, but smart EVs in the cities are being all connected to each other, together with the network of charging stations, that will what I classify as what Benson just mentioned, smart city mobility. That is something that, on a more micro level, we're investors of charging stations, we're investors in EVs, we're investors into, battery management systems. But think about that, all link up together, becomes something that is on a more macro level, really amazing. So that's my part.
Thank you, Harry. That's fascinating. I'd like to bring the same question to Chibo, and obviously Chibo has a little bit different focus, more on the GBA area, and I'm curious if he's seeing anything different in geographically because of what he focuses on, and also love to hear what segments of call it smart city tech is he most interested in, or what that you've seen things that are compelling.
Yeah, no, I mean, thanks for the question. And, it was helpful to hear Benson's kind of perspective on how he frames Citytech as an overall sector opportunity. For us, I mean, it's, Citytech is obviously very broad range of opportunities, and we actually classify a lot of other things. Harry mentioned smart mobility. I think that's one of the top kind of investment opportunities that's been in China for the last 5-10 years, and many investors, including Harry, I'm sure, has made a lot of money on that. I think these days we're excited a lot about some of the underlying technologies on the infrastructure side. As Benson mentioned, I mean, all of this data, it comes from sensors, it comes from, cloud services, it comes from a lot of these things that collect and then analyze, and then ultimately produce, intelligent results that will get Harry the data to say where the charging stations are and how far you can drive, right? And so I think for us, I mean, we're looking a lot at semiconductor opportunities, sensor chips opportunities. We're looking at edge computing. We're looking at a lot of these deep technologies that are also actually now on top of the Chinese government's kind of strategic priority agenda. So all of these things, I mean, they make up a backbone of digital infrastructure that, in the past, the supply chains and those industries, the value chains in those industries have traditionally been a little bit reliant on, outside technologies and outside companies. But these days, China's making a concerted effort to bring a lot of those technologies in-house. And so that's an area that, we're delving very deeply into.
Maybe I can switch over to Dale. Obviously, Dale, you look a little bit more from a public side, but I know you do some privates as well. And but I would also say you look at companies that are larger than probably what Chibo and Harry look at. I'd love to understand how, as you're looking at these larger companies, how you are able to delve deeper into the specific verticals, and how you're, maybe through that lens, you're able to see kind of the attractive emerging city tech categories that you are most excited about.
Yes, absolutely. I guess I should probably start with the disclaimer in that my biggest bet probably on the smart city space is through Ventris. So just putting that out there. So Benson, no pressure. But that's sort of where I get placing the biggest bet. And obviously, there's key companies that he has in the portfolio that we know well, and I think are extremely well positioned for that. Yeah, I mean, I think, people have touched on a lot of the trends. I mean, there's just a huge amount of data that's going to be generated here, and data is very important. So how that's managed and all the infrastructure and backbone that's part of that is very key. So, even thinking about things like data centers and things like that, the data needs are going to be huge. Obviously, from a broad energy perspective, just stepping back and thinking about the sort of environmental goals that China has set. And the policies that were being put in place as well is going to be, I think, really significant opportunities on the back of that. And we can delve into sort of the individual opportunities, but the whole smart energy sector, how energy is managed, what it means for the grid, and that sort of thing is a huge area of opportunity. I think we've talked about mobility. Harry touched on sort of some of the opportunities there. I think that for me as a public investor is something that's sort of investable now. As Harry touched on some of the names there, I think it's worth highlighting just, the position that China's built in electric vehicles. And as Harry touched on, it goes beyond just, the car itself. It's that, the connectability of the vehicle itself. But, stepping back, China is producing 50% of the world's EVs. Their market share in the supply chain is even higher. So I think it's worth highlighting that a whole new industry has been created where China is the leader is something that's really important. I think placing your bets in that sector is actually going to be really important because I think there's huge disruption coming as well, because it's going to be very competitive. You've got the old players coming up against the new players, and all the players haven't arrived yet. We've got Xiaomi coming in next year, and it's a matter of time before Apple joins this space as well, because when we talk about that connectability element, the car is effectively competing with mobile, and that's why you've got companies like NIO, which actually have their own handset as well. So it's going to be a bumpy ride, I think, from a competitive perspective, but it's going to be very, very interesting to watch. And then sort of moving beyond just thinking about, I think as we sort of think 5 to 10 years ahead, the whole growth in autonomous is going to be really exciting. And I guess it's a bit of a controversial area now because you look at the sort of rollout in autonomous in the US and the issues that Cruise is having. It sort of maybe exemplifies some of the challenges, but again, I think this is an area where probably China is leading. We're on track for probably 4 of the big cities to be rolling out fully autonomous commercial services, driverless cars. And that's going to be a huge change for cities from a number of perspectives, obviously, cost-wise, efficiency-wise, safety-wise. Fully autonomous cars when it's up and running are going to be much, much safer. And I don't know, anecdotally as a user, having tried the cars, I actually feel safer without a driver than with a driver in China when I'm there. Having tested the the services, but it's going to have huge implications for how people go about their daily lives and how cities function. So that's sort of, I think, something to really watch and how that plays out as well. But I'll leave that for now.
Was that a knock on the lack of ability of Chinese drivers?
Let me just say, well, I don't need to tell anyone on this call, but they're pretty aggressive. Which I think is interesting as well. I mean, talking about rolling out, the autonomous services in China, it's a different driving environment. So I think, the cars that are developing, these players that are developing autonomous driving in China, when they have to deal with a whole lot more in terms of challenges on the road. So I think it's again, probably an area where you've got companies that are coming through that are some of the best in the world.
Okay. Well, to wrap this first question up, I'd like to bring it back to Benson. What's interesting, Benson, I hear, it's always interesting to hear panels. There's clear focus and consensus around smart mobility being probably the most, or maybe certainly one of the most promising sectors within call it smart city. I'd love to hear if you have a kind of contrarian view. Are you excited more about smart mobility versus smart energy? Love to hear, within your categories, which you think is the most promising.
So smart mobility, of course, it is very, very exciting. But on the other hand, ventures came late to the party. So by the time we came, Harry invested in all the good stuff, people like buy. So we say, okay, guys, we're late. So what are we going to do? So that's why I flip it around and say, where do people spend 90% of their time, 10x the time than cars? It is actually in smart buildings. And as we dug deeper into it, there are a lot of things that we can do. So that's my answer to your question, Frank. Now, coming back to what Harry and Chibo and Dale said, I love what you said, Harry. Thank you for coining the term that there is micro and macro, correct? Micro is individual cars, like you said. How do you do the electric vehicle? You said that is, but mobility is way more, it's macro. It is the 20-hour journey across different cities. I look at the two as micro being pure technology. You develop a car and that's it. Okay. Macro is you then drive the car, you apply it. Okay. And so it's exactly like pure maths and applied maths. And I think the state of the problem has moved on from pure maths to applied maths. It echoes also Chibo. You're saying that we love specific technology. I call them, again, sort of pure technology, electric vehicle or boats or whatever else. Each is an individual product. And I looked at the last 20 years in internet history, and I realized that after you have the individual components, which is the micro stuff, each of which is one thing, you will always have people who would integrate all of them to form a great product. This is where I call the 3A companies. Apple. You can almost say Apple invented nothing and integrated everything. Apple is a system integrator, but they made it so good, making all the components working so well, and so that anybody using it, the people applying it, get such a phenomenal experience that they love it. So from micro, it became macro. So that's why backing Apple is not about, do you have the latest tech? No, it is about, can you apply it the best? The next A is, of course, Amazon. Okay, Amazon also did the same. If you look at Jeff Bezos, they don't invent stuff, but boy, they created value. And also, if you also look at Amazon, who popularized cloud computing? They did. Who took logistics to the next level? They did. Who did recommendation engine that's so easy that you don't even remember there's a recommendation engine behind it? They did. Okay, so micro turns to macro. You integrate existing things, put all the bits and pieces together, weave it together into something that is amazing. And because it's amazing, people pay you. And then new technology comes out of it. And of course, the third one is Alibaba, e-commerce. E-commerce is not the technology. E-commerce is, again, how do I integrate everything? And then you create something. So that's why my take when I came out of Fidelity, so to speak, is I asked myself, what stage of history are we in? What should we do? So I'm thinking, actually, if we think of the micro thing as a vertical silo, it is now the time to sort of weave them all together. So there you are, Frank.
I'll jump back to Dale because I heard you reference data center. It's definitely something I've heard now a few times, that this seems to be a really attractive area now because of this emerging technology trend.
Yeah, I mean, it adds to the data requirements that we're seeing on the back of mobile, etc. But yeah, when we start talking about cars communicating and all the data that's required to manage autonomously, it's just exponential in terms of the data needs. So yeah, I mean, it's definitely not going away, and in fact could accelerate in terms of data growth. So things like data centers are going to be very important. Obviously, when we're talking about China, even though it's growing strongly, cloud penetration is still relatively low relative to other markets. So as things do shift to the cloud, I think the data requirements are going to be really significant. In terms of the ways to play that, I mean, I think the data centers are definitely going to be required. The level of technology required there is kind of a different story. I mean, in many ways, they're more about sort of real estate businesses. But I think as part of that, you could include the cloud providers. So, the big names, the Babas, the Huawei's, Tencent, Baidu, etc., are all companies that are, potential beneficiaries, as well as the local, the telco providers are all potential beneficiaries of that shift.
Got it. I'm curious. So using the macro micro term, Harry and Chibo, at the micro level, are you seeing people now that we have this new kind of accelerated increase creation of data? Are you seeing startups trying to figure out ways to better store it, to better process it, better compress it, to better analyze it? And maybe this goes to a little bit of the AI theme. Can you, more, in a more automated fashion, take advantage of that data? So I'm curious if either of you have seen any. No particular order. Harry, you want to start first, or and tell us a little bit about if you've seen any interesting startups in this category?
Yes, definitely. I think when Benson and you all touch upon IoT and data collection and data warehousing, these all to the newer extent, we're all interconnected into what we talk about AI now. Right, I'd like to share an example of we started to look at not only AI, then there's the AI training, there's the AI infrastructure, and now there's the AI combination of AI and robotics. So making not only ChatGPT, the verbal versions of search to be smarter, but anything that you can touch, that you can interact with, are smarter. So we're talking about probably multiple dimensions, higher level of I would say data that is yet to be collected in the future. Because what ChatGPT or OpenAI has currently done has only analyzed the entire internet words. They have not even started with the videos that were produced, and not to mention that they have not started to deal with all the robotics, all the movements that has been tracked historically. Imagine in the future that we have tens and hundreds and million times of these data yet to be collected and analyzed. There should be a lot of opportunities in the market that we are seeing. From me, again, I like to say that we look at from a more micro level. We're definitely looking at robotics. We're looking at the crossover of AI and robotics. And since we're looking at that, we're looking at the new way to analyze data, analyze videos. How can a computer to recognize movements of people on GoPro videos, so that you can train the robots to dance and move in the future. And all these are talking about multiple levels of complications versus all the words and all the books that you can index in the internet right now. So there should be quite a number of pretty high possibility and opportunities for not only startups but also investors like us to look at infrastructure like that in that particular area.
Thank you, Harry. Chibo, thoughts on the data side?
Yeah, I mean, AI is another one of those sector opportunities that's just so broad and all encompassing these days, right? I mean, so maybe I won't speak as much on the AI side. But if you look at some of the micro opportunities around data and data centers, even data centers themselves, I mean, they're more in the realm of kind of almost real estate investors, telco, right? I mean, these big cloud service providers. But I think we've seen a number of startups that have use cases within those data center projects that we found to be fairly interesting. One of those obviously is a semiconductor chip company that does temperature sensing. Obviously in data centers, one of the biggest kind of costs is actually cooling, right? Because the servers will get very heated and temperatures will need to be brought down. There's need for monitoring, sensor technologies. We've also seen startups in the new materials space out of one of the universities here in Hong Kong that helps with cooling, like very high temperature. I think it's like 300 degrees Celsius type metal. I mean, you pour water on it, the water just splashes off. I believe it's called like a Leiden-Dahl effect or something like that. But it's a very scientific term. But this new materials startup has just come out and said, okay, well, we found a way to have a mesh over the metal, and you're able to kind of use water actually to cool down these servers. So those are some interesting kind of technology applications that we find are relevant around that. But obviously data as a whole, AI as a whole, those are extremely large opportunities with many different use cases across many different industries. And I think some of that would fall within Citytech, but much of it may be considered opportunities in other realms. So I think it's really just what investors are interested in these days.
Thank you, Chibo. I'd like to shift gears of the panel a little bit. I'd like to talk about how we think about this opportunity from a geographic standpoint. Is this really a China-specific opportunity, given kind of where Sino-US or Sino-global relations are? Is this somewhat government policy-driven, or is this something that could transcend? Could, Harry, your companies, Li Auto, XPeng, become global leaders in what they do? I'd like to ask the panelists how they think about this. And since I kind of tapped on Harry first, I'd like to ask you, do you think the companies that, in smart mobility that you're backing, are they China opportunities or global opportunities?
It's actually, I like this question a lot because I think we might have different opinions about it. The way that I see it, it's very country specific. Country can act as a whole. China can act as a country because it can unite, all the provinces, all the cities into one standard. But using, at a micro level, a EV or a smart EV companies to go across the board to other cities and being able to manage and tap into the rest of the other infrastructures, I think it will get more and more complicated in the future of this current world that we're talking about. I think the what we're seeing is opportunity will likely to be arises within countries right now. I think, and there are enough opportunities for not only us to invest, but also for Benson to develop and all these startups to take care of within China alone. Whether or not there's geopolitical situations or not, I think within the next 5 to 10 years, you just need to stay local to make enough process out of it, and that's how I see it. I think it will be very much with or without policy driven. It will be very hard to, because when you're talking about connectivities, you're talking about getting data and getting infrastructure, using API to integrate with data from other countries, other cities. In this current, fragmented world, I just don't believe that is not very, I would say, easy to process right now. It's not a thing that is easy to do. So I think, maybe in the future, I do hope that our world will change back. But in the current meantime, I think opportunities do reside, at a country level.
Thank you, Harry. Let me pass it over to Dale. How do you think about it from a public investing standpoint?
Yeah, no, I think I agree with Harry. The answer is it probably depends on the industry. If it's pure hardware, there's going to be businesses that will be able to go global. We've talked about EVs. With China, I mean, frankly, in EVs, I don't see how anyone is going to be able to compete with China because the volume they're producing, they're leveraging a huge domestic market, taking that offshore, and they've got even higher market share in the supply chain. If you look at the battery supply chain, the materials, etc. I don't see how anyone's going to be really able to compete with them. Of course, I expect they won't be able to go to most markets. And that sort of gets into the geopolitical realm. But that's an area where similar to it's happened in areas like solar. I think when you've got the volume and you've made all that investment in R&D, it's going to be hard to compete in those areas. But when as Harry mentioned, when it comes down to the management of data, I think it's quite a different story. I mean, we know that the whole issue of data sovereignty is just becoming more and more sensitive these days. So, talking about, transferring data across borders and things like that are very, very sensitive. So maybe those economies of scale that we see, from a pure manufacturing perspective, don't really transfer to some of these more data software related businesses.
Got it, Dale. Chibo, I'm curious because you focus a little bit more on the GBA, are you also really still more just domestic focused China, or do you think about whether because of the GBA companies have a little bit more of that international bent with Hong Kong, that some of your applications could go global in this area? I'm curious to how you think about it.
Yeah, no, I mean, I think there's two layers to that question. I mean, obviously, from a micro kind of investment side, in terms of the portfolio companies that we invest in, and especially as Dale mentioned, some of the ones on the hardware and the product side, I definitely see that they have opportunities to be able to sell those products and technologies overseas. But at the same time, I mean, I also agree with Harry in that, and I think it will be country specific, but I would actually go a step further and say that in the world, there's not a doubt in my mind that China's going to be at the forefront of kind of this digital city and this Citytech kind of space for two reasons really. One is obviously just the underlying technology, just geopolitics aside, right? Just the underlying technology and the mobile networks having the 5G and 6G on the way. I mean, it's way far ahead of many other economies in the world, right? That's number one. And number two, just the openness of data in terms of data privacy. And this is more on a little slightly more micro level than what Dan was mentioning around data sovereignty, which is data transfer between borders. But the openness and the willingness of Chinese consumers and businesses to be willing to trade their data for convenience, I think that's a mentality as a society that China has that maybe nowhere else in the world would have, right? I mean, in the West, you hear all these lawsuits about data privacy, infringement of data, and there's a lot of standards and all this regulatory tape basically that is preventing a lot of this, and perhaps rightly so, but we're not going to question that here. But in China, at least, it's the average Chinese consumer is totally fine with sharing their payment records or whatever if they can just use their face and be able to walk out of a store having paid already, right? I mean, their credit scores being recorded by a private company in order for them to get very easy access to small loans. I mean, these are things that the Chinese consumer is just built into their everyday lives already. And so the readiness of society and therefore the government to act on that to promote more of these policies, I think that is unprecedented, right? So, I definitely think that, whatever Benson is doing in the Citytech sphere, all the the leading technologies that he mentioned before, whether it's like the digital twins or like the IoT and all this, that is all going to happen first in China. And so that's not GBA specific. I do think that is applicable across China. But I think within the GBA, I mean, having access to the Hong Kong and Macau, the two special administrative regions, I think there is an even more interesting angle there as China potentially in the future kind of experiments with things outside the their general kind of purview.
Thank you, Chivo. So I'm being reminded right now, I have a few more minutes with you gentlemen. There are probably two more, kind of big questions I'd like to get to. So probably for the final two questions, I'll do a little bit more of a selection of panelists to make sure we kind of get through everything so that we're able to kind of cover all the key topics that we wanted to do today. The next question I want to run through is something that I think as any investor who's played China, it's quite, kind of interesting development, right? For the longest time, you could kind of just simply play BAT or don't even do BAT, just do Alibaba Tencent, and you could basically capture all the exposure you would need in the marketplace. Obviously, the market has changed dramatically, so, is it more, kind of maybe startup friendly? Maybe not. I'd love to kind of explore how in this next cycle, do you play the major still? Is it the challengers that have the opportunity? how do investors make money, in this particular segment, and specifically, take advantage of the smart city tech? Is it going to be the big guys, or is it going to be the small guys? And maybe I'll start with Benson on this, and let him give his thoughts.
I think very good question, because that's something that we spend a lot of time thinking about, and that's why we structured ventures the way we did. The beauty of the big guys is that you have scale, you have everything. So if you can somehow tap into the big guys, it's much safer, and you have ready markets, ready customers, ready everything. Okay, so you want to be with them, but they are slower, more bureaucratic, everything, Yeah, they are huge ready, so the opportunities are less. On the other hand, startups are great, but this environment is very, very complex. There are a lot of things, moving parts. I think it's very tough to be a startup now, much tougher than 10 years ago. And 10 years ago was much tougher than 20 years ago. So I looked at the two, and then I say, wait a minute, neither is a good play. So what do? I said, what if I can somehow ventures partner with the big guys, just like we partner with Arab doing smart buildings because they're the biggest brand in construction engineering, and we partner with CLP, China Light and Power, because they are the biggest brand in energy. Tap into them because they want to be nimble, they want to be innovative, they want to be disruptive, which is difficult for them. And then we say to them, okay, meanwhile, we are working with our Anjie energy startup, so to speak, not an entire startup, because I think those are too dangerous, so to speak. So instead, we have people that are already, let's say, 10 years in the making, ready product, ready teams, ready everything. But, scaling. So they need, what the big companies can come and bring to them. And I said, what if we can work with both? What if we can actually tap into both? Isn't that a third way? Just like portfolio theory, if you have both of them, we actually end up in a place that is higher return, lesser risk. So that's how we structured ventures. So, sorry, I'm playing my own book. I looked at the whole thing. I thought about investing just into, I'm in A up to my bejesus anyway. I'm not in T, but I think that was so I didn't think that was the smartest way for me, put it this way. Meanwhile, I've been doing startup all my life, and likewise, I believe in that. So that's why we created this third way, which is what if we can leverage both of them and use that to increase return and reduce risk. So that's my take, but I'm
thank you, Benson.
I'm selling my own book.
Yeah, it's okay. Good to believe in what you're doing. Let me switch the question to Harry. You've been doing VC in China for a very long time. Do you still feel you can build startups, from Series A, B to, 100 billion, kind of market cap company? Do you think that is still possible? And especially in this newer sector that we're talking about in this smart city tech area. Oh, Harry, you're on mute.
Very good question. I think it will be extremely hard, obviously, much harder than 10 years ago. But I would like to put into perspective, it's not totally impossible. There are companies in this sector that are as big as what we see as the ByteDance, the Tencent, the Alibaba, like in the deep, I say broadly in the deep tech area, right? Xiaopeng Lixiang add up together is a $50 billion market cap. CATL as a battery provider is more than $100 billion market cap, and these are all 10 years old companies. And so if you're in the right industry and it's growing, what Benson just mentioned about, we're talking about much broader scale opportunities. So that is still possible. May or may not be the type of very much asset light platform companies that we're referring to. Definitely not, right? But look deeper. I do see that there are opportunities that way. It will be much harder to pick, but it is possible. But at the same time, I think, what is even more possible is, there will be a lot of vertical industry leaders. Right now in smaller verticals, battery management system, when we're talking about smart city tech in energy, you can talk about, chipset companies. It might not be NVIDIA of China, but might be a particular business unit of NVIDIA that can do a particular kind of function. These can all be, vertical sectors leader that are as good as before. So this is what I think from a China-specific VC early stage that we're currently looking at. I think we're shooting for a lot of the vertical smaller winners, which will not be. I think we'll actually have a lot more than before. When I talk about, there will be much less $100 billion companies in the future, but there will be a lot more $2 to $20 billion companies in the future for China in this particular sector alone. And I think that's what we are looking at right now, and there should be enough opportunities for myself and for investors on this panel to capture.
Interesting. Let me contrast that with Dale. Looking at the public markets, how do you play it? Does Alibaba, Tencent get back to $1 trillion, or is it a better play to find the $1 billion or $10 billion company that can become the next Alibaba, Tencent? Is that possible? How do you look at it from a public market perspective? How do you play this?
Yeah, I think it's an interesting question. I mean, I think what's changed versus 5-10 years ago is that the big guys can't stamp out competitors like they did, potential small competitors like they did in the past. The regulator is watching. So I think it's, that's a positive for the smaller guys. It's, it's a different environment. And it's pretty clear that, as I said, these guys are big companies and they're watching their moves. So that's one thing that's positive for the smaller guys. The other thing that's also different versus some time ago is that money's not free anymore. And these guys are big companies and they have big balance sheets. And it's a tougher funding environment, as we all know, for the smaller companies. So there's sort of positives and negatives on both sides. I'm probably spending more time looking at the smaller players. It's probably a better competitive environment for them. So
do you still own Tencent, Alibaba?
I do. Not as much as I had in the past.
Okay.
Obviously, valuation's a big factor. They're much cheaper now than they were, but yeah, I still have them. But again, in terms of where we're spending our time, particularly in what are new markets and where they may not have the skill set or that sort of the core advantage that they did in other markets, we're probably spending more time looking at the smaller emerging players.
Thank you, Dale. So I'd like to do my final question. I will give everyone a chance to do the final question and wrap up today's session. What I want to conclude with is I would like to ask each panelist which subsegment of, call it smart city tech, smart energy, smart building, or specific company already in play, like an XPeng or a Li Auto, that they are most excited about, where they would put their money in. Right now, in terms of kind of what they think is the most promising way to play this smart city tech trend. Let me start with Chibo.
Yeah, I mean, I think it's a lot of what I mentioned before in terms of the infrastructure and deep tech kind of sectors. I mean, those are areas that we're looking much more closely at these days. And, just on the last question and Harry's answer with regards to, there being a lot more of these, $2 to $20 billion company opportunities. And a lot of these will be in those deep tech and more enterprise focused spaces. I mean, I'm a big believer in that as well. So, I think, whether it's semiconductors or new materials, I mean, those are areas that we're quite excited about.
Got it. Harry, is it XPeng Li Auto or you have someone else?
Or is it Ventures?
Oh no, I said Harry. So
yeah, I think what make myself most excited about will likely not in a particular company, but will be residing within the data part. We're still at the very early stage of data collections. Without collecting these data, the city cannot be smart. So anything related to hosting, managing, using AI to process it, connecting data together, will make this smart city concept to be much smarter. So I'll be focusing on that particular area.
Okay, got it, Harry. I'm gonna save Benson for last. I'm gonna give to Dale, maybe a leading question. Are you gonna say Venturis, or are you gonna have to, are you gonna come up with a sector or another company? What do you think?
I'm going to cheat and say Venturous, and I still think mobility is the one that is sort of, we're on the verge of seeing a lot of growth. I would avoid the OEMs, but I think when I look at the supply chain, the companies that are supporting them and their volume growth, and then, like I said, autonomous is really, we're just at the sort of at the beginning stage. I think it's pretty exciting as well.
Got it. Benson, final thoughts.
Final thoughts were about the doubt smart energy. There's an energy revolution going on in China. The whole market is reforming. And this market will be bigger than the internet 20 years ago, when the telecom reform changed the telecom market there from a monopoly to a fully competitive, telecom market. So the energy market is coming. This whole new thing, this energy revolution is ongoing, triggered by what? Triggered by President Xi's Shuangtan, 2030 peak, 2060 neutral.
So, Dale, I'd love to ask you a question. Obviously, it's been a very tough public market environment with China over the past 1 to 2 years. First with COVID, and then obviously with where Sino-US relations are. How do you, as a public investor who's principally focused on Asia and China, how do you handle this?
Yeah, no, you're right. Yeah, no, absolutely. China is very out of favor. We've been through COVID and the lockdowns. We've been through a regulatory storm, and now there's concern about the economy. My sense is a lot of bad news is priced in. We've got a lot of Western economies that are trying to engineer a soft landing. Well, China's already landed, and I think the government is definitely taking more action. There's definitely concern about the property sector, but again, the government is doing more on that front. I think on the positive side, you've got a consumer that's very much cashed up. So in some sense, the consumer is sort of sitting there with a full tube of toothpaste. It just needs some confidence. There are some positives there. I mean, we've been through, looking at the big tech companies that we've talked about today, they've actually done quite a bit of cost cutting, and they've reduced their workforces. I think that hasn't helped sentiment, but I think the worst of that is behind us. Everything that we've talked about, AI, is actually driving more investment. So potentially less bad news on that front. I think from an economic perspective, things can slowly improve, and it's coming at a backdrop of very, very low valuations from a historical perspective. MSCI China, 9 times forward earnings, a standard deviation, if not more, of sort of historical averages. You've had huge outflows, but really how much more is there to go? And sort of, I don't know, from a buffer perspective, with the fear that's out there now, there's a time to be greedy. So actually, I'm definitely allocating more to China in my regional portfolios.
So you think it's bottomed? I mean, bottom line,
it's hard to call bottom, but I think we're close. I mean, like I said, from a valuation perspective, you've got a lot of stocks that are at historical lows, with actually okay, earnings perspectives. And again, with China, it's always a very volatile market. It's impacted by the headlines. The headlines, get used to it. But we all know, everyone on this panel knows, while this is happening, the companies on the ground are getting on with it, and consolidation is actually accelerating across a range of sectors. So the winners are actually getting stronger. So, stock prices will follow earnings, and we're focused on individual companies. There's a lot of individual companies that are actually doing quite well.
Thank you. I'd like to contrast that question, with Harry and Chibo, who are obviously in the private markets. The horror stories are out there, that basic global LPs have effectively allocated significantly away from China. It's considered one of the most difficult fundraising environments for China VC as a category. There's also quite a bit of murky outlook historically. US IPOs was a very, viable, exit outcome for the China offshore venture capital funds, and that's obviously made Matrix a lot of money and a lot of success. That is obviously significantly under question now. So again, maybe I'll start with Harry, also hear from Chibo, how you think about this environment where it, at least in the, the general outlook, it seems like the world is allocating away.
Yeah, very good questions. I think it's actually, just to put it to the point that I think is the best time for investing as an early stage VC. A couple reasons behind. First of all, I think, obviously the LPs are allocating out of China, but for the ones, sitting on this panel, being successfully raised the recent funds with dry powder, you're in a much better position to be able to deploy because you have much less competitors in the market. That's number one. Number two, there's this new pricing, structure that we have been all readjusted. Deals are a lot more cheaper, a lot more reasonable. We can have a lot more time to do due diligence before we make a commitment to a deal. So that turns out to be in favor of people like us and Chibo. That's number two. Number three, I think, liquidity has definitely been dried up a lot. That hurts us, but that does not hurt today's fund. That hurts the funds that we have deployed 5, 6, 7, 8 years ago, because those are the companies that have grown and ready to be exit. That has been drying up the liquidity of private funds. But if you're talking about today, the companies that we're investing will likely only to be listed in the next 5, 7, 8, 9 years. So what I imagine, we are at the bottom. The VCs, the top tier ones with the capacity and dry powder to deploy at a much better, reasonable situation could be able to perform. So I do think that this is the best vintage if you stay committed to the China market, as long as you can adjust your strategy into what I say more, I would say, regulatory focused, driving towards what we all think about, either, deep tech, self-sustaining chipsets, EVs, new energy and the like. You do have the opportunity to perform as good as before.
Thank you, Harry. Chibo?
Yeah, I don't know what more I can add. I think those 3 points sum it up quite nicely. Yeah, obviously the funding environment isn't great, but yeah, there's a lot less competition on the ground. Valuations in China are much more reasonable and much lower than any other region that we're looking at or we're seeing. Just to give a little bit of color on that. Most of the deals that we're doing in China now are being done at price to sales of maybe 1 to 2 times. In Southeast Asia, that number is as high as like 8 to 10 times, and I think that's already lower than what China and the rest of the world was like 5 years ago, right? So overall funding is down. China is down even more. But I think one other interesting thing that I would note is that even though there's been a significant pullback of kind of Western capital, I would say, from the China market, there is actually a lot of, I guess, China allied capital that is kind of repositioning and recalibrating in this new situation. And these US dollar kind of sources, like just for as an example, in Hong Kong, the Hong Kong government has repurposed a lot of its own money to be focused on building the ecosystems in Hong Kong and GBA and therefore throughout China. So there are new sources of capital that are popping up, that are standing up to support and to back these new opportunities in this day and age. So I think as long as you have the right LP backing and dry powder to deploy, I think there is still going to be another wave of kind of success coming out in the next 5 to 6 years.
Well, thank you. That's encouraging from both Harry and Chibo, and I guess with Dale as well. I think this concludes our Citytech investment panel. I actually quite enjoyed this. Hopefully the panelists did as well. I, like many investors, have suffered in the past 18, 24 months Pretty much all my portfolio is down. Haven't had many bright spots, but walking away from this panel, I'm definitely going to go look at smart mobility. I'm going to take a look at some Li Auto, Xpeng stock. I have never invested in data centers, but that sounds also very, very promising. And lastly, probably smart energy. I mean, obviously, I've gotten some exposure. I guess I have some small shareholding in Venturis, but smart energy probably is one other area I walk away from this panel thinking is quite promising, and has some nice kind of secular upside. Taking advantage of this smart city trend. But well, I want to thank all the panelists. And thank you for having me be the moderator for this event. But I think we can wrap up now, and I thank everyone for attending today.